Well, good morning, everyone. It is 10 o'clock, so let's go ahead and call the meeting to order. Item number 2 on our agenda is to approve the minutes of the meeting of April 13th, 2017. Second. I have a motion and a second on item 2. All in favor? Aye. All opposed? Motion carries. Item 3 is to ratify approvals. Item A is payroll for the month of April 2017. I have a motion and a second on item 3A. All in favor? All opposed? Motion carries. Item 3B is to ratify the action of the Secretary and Administrator in modifying the application due to a change in the average final compensation and monthly pension amount. We have 2 cases. I have a motion and a second on item 3B. All in favor? All opposed? Motion carries. Item 4 is to approve the claims docket. I have a motion and a second on item 4. All in favor? All opposed? Motion carries. Item 5 is to approve the following applications for service retirements. We have 3 applications. Motion and a second on item 5. All in favor? All opposed? Motion carries. Item 6 is to receive the report of death, authorize the payment of the $5,000 death benefit, and authorize the Secretary to make changes to conform on the following. We have 2 cases. Have a motion and a second on item 6. All in favor? All opposed? Motion carries. Item 7 is to receive the report of death, authorize the Secretary to make the necessary changes to conform on the following. 1 case. Second. Have a motion and a second on item 7. All in favor? All opposed? Motion carries. Item 8 is to approve the following application for vested rights. We have 3 applications. Have a motion and a second on item 8. All in favor? All opposed? Motion carries. Item number 9 is to approve the request of the following to terminate vested rights and commence drawing retirement benefits. 1 case. Have a motion and a second on item 9. All in favor? All opposed? Motion carries. Item 10 is items for individual consideration. Item A is a resolution approving designating certain individuals to be authorized to have access to certain ERS trust and custody accounts held by Northern Trust Company and approving the Northern Trust Company benefit payment authorization.
Mr. Chair, is
Yes,
there a specific reason we need to do this now, or is it something we've done on it?
I'll yield to Renee.
The reason we are doing this is, of course, Northern Trust is our new trustee, and we're setting up the benefit payments. So that's to allow Debbie and I to actually set up the benefit payments and get the benefit payment modules going for July 1 effective date.
Did we do that with our previous trustee as well?
Back in 2007, yeah.
Okay. Okay.
Any other questions on item 10A? Entertain a motion. Second. Have a motion and a second on item 10A. All in favor? All opposed? Motion carries. Item 11 is investment consultant report. Oh, I'm sorry. Getting ahead of myself. That's right. I thought we had another one. I'm sorry. Item 10B is a resolution authorizing the law firm of Labaton Succarow to initiate litigation against Rackspace Hosting Incorporated and authorizing Labaton Succarow to designate the Oklahoma City Employee Retirement System as a plaintiff in the case and authorizing the plan administrator and the municipal counselor's office to negotiate a retainer agreement with Labaton Succarow for subsequent board approval. Somebody want to give us a little background? I'm familiar with this because we've talked, Wiley, but the other members might want a little bit of.
Good morning. Earlier this week, we received notice from Labaton Succarow. It's a law firm that we have an agreement with that monitors cases for us, the potential investment cases where we have our investments and if there's any kind of issue that might arise. They notified us this week that they'd like to file a lawsuit against this Razor Space Hosting, Inc., and they sent a report, and when you read the report, it sounds like they have a pretty fair and sound case against it. They're looking for a plaintiff, and they would prefer to have a plaintiff that has more at stake than we have. So I don't know that we would wind up being the lead plaintiff, but they need to have a plaintiff to go forward with the case, and they have to do it by tomorrow to preserve any statute of limitations arguments. And I need to make you aware that if they file the case and we become the lead plaintiff, then it will require some additional work from Renee, and any one of you could be subject to subpoena, and including our investment manager who bought this stock. So a lot of, I was talking with Jason before the meeting, and he says a lot of boards and things have policies in place of minimum amounts before they'll get involved in a lawsuit. And we're going to visit with that issue and maybe bring something back to the board to talk about that. And but today, you need to decide whether you want to be the potential plaintiff and lead plaintiff in this case, and the amount's around $60,000.
49,000 is what they've notified us of a potential loss.
How much would we expect to expend in legal fees? Or
Well, they were supposed to send a draft contract. Our current contract with them says that if they pursue litigation on our behalf, we have to enter into a new agreement. But generally, on a class action lawsuit, once they have the whole class together, then the court will set the attorney's fees, the amount, and that usually comes out of the class settlement.
Right, we're not expecting to pay any additional fees and legal fees. It's to all be taken out of any settlement that we may receive.
But isn't it up to the
Retainer agreement.
court to determine whether or not this will be a class action
Right.
suit? And that has not been determined yet.
Has not been determined yet.
So is it safe to say that as of this point, with the deadline being tomorrow, that there are currently no other plaintiffs? Is that the case, or am I incorrect?
That's the way I took it when Renee and I talked with them Tuesday, I think.
Wednesday, something, whatever day it was.
They still had not found another plaintiff, but they did make it clear that they had hoped to, once the class is formed, then everybody's in the class, the potential class, and then they'll find someone who has more at stake.
And I guess that's my concern.
To that question, it may be that Labaton just doesn't have another client with significant losses.
Right.
There's other firms out there that could. I don't know if that question was asked.
Yes, I did ask that, whether anybody else had filed lawsuit yet, and they're not aware of it. And, of course, they'd like to be the first.
Well,
So,
that-
Wiley, can you discuss what our potential financial exposure could be if this is not designated as a class action lawsuit?
Until I see their contract, I don't know the answer to that question.
And that's my concern.
But even if it's not class, it's still, any legal fees would come out of the award, right?
That's the way I would want it to be.
Okay.
But there's no guarantee, and that's my concern, is right now, our recovery is about $49,000. And what I would hate to see happen is us incur significant legal fees when our recovery is only $49,000. I'm not saying $49,000 is not significant. I do think that it is significant. But they don't have any other plaintiffs at this point. So we would be the only plaintiff. And since Wiley has not seen the agreement, we don't know what our exposure could be at this point. So I don't know that we have.
Well, we could get out of the lawsuit. I will say we can stop the lawsuit if we're the only plaintiff.
We can also not, I mean, it's for Wiley and I to negotiate if we see that we are actually going to have any type of outlay, meaning the system is responsible for certain fees, we cannot sign the contract and not go forward. At this point, we're just trying to, because of the deadline being the statute of limitations ending tomorrow, we're trying to work to go through today to get the approval to actually look at their contract, negotiate, and if we see that we are actually expending anything, I don't believe it's not my intent, because the loss is only $49,000, and the potential legal fees could be significantly higher than that to entertain a contract with them.
Those are all fair questions.
Yeah.
I had the same thought process. It just, I mean, they needed it fast.
Well, it begs the question, if our exposure is only $50,000,
Well,
you would think that there would be some
but they may not have.
larger entity out there that...
Their other clients may not have bought this stock.
Right. So there's so the potential is out there to actually form a class, but at this point, we don't know.
We don't know.
We don't know.
And that was my point. Another law firm may have clients that have larger losses that will step in. And if that happens, it doesn't matter if your attorneys are the counsel or the plaintiff or not. You're part of the class. If there is a class action simply for owning the security, you own the security during the class period. It doesn't matter that you...
So our deadline of tomorrow is our deadline to become a plaintiff. We don't know at this point if there are any other plaintiffs.
We don't know.
And if it becomes class, do we get added to it by our ownership, not whether or not we've added ourselves on as a plaintiff,
Right.
right?
Right.
Did they provide clarification if they had been unable to locate another plaintiff, or if another plaintiff was not interested in becoming part of the lawsuit?
They can't go out and just advertise. So they look through what they have contracts, just like we have with us, with other clients. And they can look through those matters. And obviously, they haven't found anybody else that, with their...
What I mean is, had they not found someone because there isn't, or they haven't found someone who wants to sign up to be a plaintiff?
I don't know the answer to that question.
Well, I would think it would probably be wise to go ahead and approve it today, and if it turns out that our exposure as far as legal fees is going to be cost prohibitive, that we don't enter into that, that additional
And we can make that clear to them.
retainer agreement. I mean,
Well, Mr. Chair, I would like to further clarify that, since we haven't defined what cost prohibitive is. I would like to say that if we identify that there's going to be costs associated with it, then they bring it back to this body, and
Any
we evaluate
costs.
that.
I agree.
okay. I'd be in favor of that, too. I mean, it's, there's a fine line between doing your due diligence and, being a fiduciary and looking out for the system's best interest, but $50,000 in the whole scheme of things is not.
Because the potential legal fees, we know
Right.
$50,000 of legal fees is not, I mean, they can add up so quickly that,
And
What's the pleasure of the board?
so we could authorize this to have Wiley and I look at the agreement
It states
and
the
approve it
retainer
if there is
will
going to be
come
no
back
cost to the system.
Okay, okay.
It's going to be all on a cost recovery basis through the settlement.
Okay, and it does say in the item that the retainer agreement with the firm
Right, will be brought back.
will come back for subsequent board approval. So if we don't like it, then we don't have to approve it, and then it's a
Right.
moot point.
Yeah, I'm not about to bind you guys at all, so I definitely would bring it back.
Do I have a motion? Anyone like to make a motion? Well, hearing none, Madam Clerk, what's our options? That it just dies for lack of a motion?
Yes, it dies for lack of a motion, and the action will be no action was taken.
Okay, well, moving right along. Item number 11 is the investment consultant report.
Okay, good morning, everybody. Have the quarterly report and the ASAP. I'll try to quickly cover capital markets and what's gone on. If you just turn to page 11 in the, or I'm sorry, 21 in the Brown Book, this is a summary of market returns through the end of April. I just want to focus on the year-to-date and the one-year column because we have seen a big turnaround. In the fourth quarter of really beginning in the third quarter, post-Brexit, moving into pre-election and then post-election, we really saw value-oriented sectors, primarily financials and industrials to some degree, and materials really rallied on expectations of rising interest rates, looser regulation, and spending, domestic spending on infrastructure. And so those sectors really took off into the latter half of the year, both in the U.S. and outside the U.S. Year to date, we've seen that trade abate a little bit, particularly following the failure of the health care bill to pass and just investor expectations that things may, fiscal policy may take a little bit longer and may be less clear as to what the outcomes are. And so you'll note from a value and growth standpoint, year-to-date growth has outperformed value. So that's a turnaround there where financials have sold off, energy has sold off, and those sectors that weren't doing as well, just consumer discretionary, healthcare, technology have done a little bit better. In large cap growth outperformed value by 8%. In small cap growth up 7%. Small cap value up basically 25 basis points. The other turnaround, and we've talked about this the last several years, it's been primarily a U.S.-dominated equity markets, outperforming non-U.S. As the dollar had strengthened over the last several years. That has abated as well, and year-to-date, you've had a little bit of dollar weakening and foreign currency strengthening, particularly in emerging markets, and that's helped quite a bit with some of your portfolios. So if you look at the EM index, which is at the very bottom, year-to-date through the end of April, up 14%. That's the best performing equity asset class. The EFI benchmark up 10.2%. So outperforming U.S. large and small cap. Small cap certainly has had a very good run, a little bit richly priced, and we're seeing a little bit of a sell-off there. If we just turn to your portfolio, on page 24, a dollar reconciliation for the trailing 1 year. You began April of 2016 with a little under $640 million. Net additions of negative $32 million, so that's contributions in, less money going out for expenses, so spent $32 million. Return on investment of close to $70 million over that time period. So sometimes it's helpful to put it into dollar terms as opposed to talking about percentages. So the portfolio ended the March 31 period at a little under $680 million, at $676.4 million. You look at page 25 in this kind of simple flash report card, we look at 5 and 10-year periods. The 5-year period, all yeses, so the last 5 years from a return and risk standpoint, meeting all measures, above your required return of 7.5%, above the policy index or what your asset allocation would suggest, and the risk measures, which even over 10 years, the risk measures have all been below the market risk, so a lot less risk, but more return over the last 5 years. Over 10 years, certainly less than your required return. That's still primarily 2008, or it's really exclusively 2008. I didn't do it in this book, but I've looked at it for some other clients, and it's pretty interesting now as we look at the end of March. If you look at an 8-year number, so that's really going back to March of 2009 when the market turned, we're seeing most investors are up around 8.5% to 9% annualized over that 9-year period. You add that 10th year in of 2008, or ninth year in of 2008, and you're dropping about 4% there. But I think it's important for folks to realize this last 8 years has been a very good 8 years, and you'll see that in a couple of pages as well. Page 26 and 27 just looks at asset allocation of the overall portfolio. Continue to be slightly overweight to equities, where we continue to trim equities for your cash needs. I think we're taking from small cap again this month to meet your cash needs, and you see at the top of this page small cap over by about 2% or 15, and from a dollar basis about 15 million. Our opinion is small cap's just a little bit overvalued relative to large cap, so that's where we're taking this month's cash needs. Page 27 looks at EM exposure. From an equity standpoint, slightly over the 5% target. That's primarily due to emerging markets doing well recently. On the fixed income side, you also have exposure to emerging market bonds. The Brandywine strategy has a pretty significant exposure to EM bonds, and that's been very positive over the last year. You have a 3% exposure overall to emerging market debt of the total portfolio, but that Brandywine strategy is about 46% EM debt currently. Just turning to page 28 and 29, one-year return and that $60 million return equated to about a little over 11% return, 11.16, which is slightly ahead of the policy index, slightly behind the peers with a 55 to 70% equity allocation. You're going to be more conservative. You're relatively more conservative due to the defensive strategies you have in your portfolio than to others that have as much as 70%. One, you don't have that much equity, and two, you have a pretty significant hedge component in your equity. So if you look from a risk standpoint at the standard deviation, you'll see your standard deviation is quite a bit lower than the peer group and the policy index on a 1, 3, 5, 10-year basis, and your Sharpe ratios or risk-adjusted returns are higher, so you're getting more bang for your buck. Page 29, I think, gives that lower left, that 10-year growth of $1 does give you some sense of what it's looked like since 2009. So for every dollar you had invested beginning in, this is going back to 07 now, you see that dollar in 07 dropped by over 20 cents, probably about 30 cents or 30%, and now it's up from 70.7 to almost 1.8, and that's a pretty big move over the last 9 years. You also see on page 28 those calendar year returns, which equate to your fiscal years as well. What we would expect is this portfolio is going to do better in periods it's going to keep up when markets are going up. It's going to do better protecting when markets are going down. So haven't had a lot of down years in this period, but if you look at 08 and 2015, both of those years your portfolio did protect on the downside. 2008 pretty substantially. 2015 essentially flat. Policy index down 87 basis points. You were down 14. Peers down about 0.5%. So you're losing less and then participating on the upside. So certainly doing what we would expect the portfolio to do. Just quickly on the ASAP, the April report, portfolio was up another $8 million in April. So it ended at the month of April at $684 million. Asset allocation still slightly overweight to equities. In line with on fixed income, real assets, real estate, and commodities slightly underweight. We talked last month about adding a new opportunistic real estate manager in Sigler Guff, so that will start to move that forward a bit as well. Just from a asset class and manager standpoint, if you turn to page 2, this is just looking at your composites, the various asset classes that you're allocated to. So now, really looking at the year-to-date numbers, we're starting to see pretty good excess return from active managers across the board. On a one-year basis, very good absolute returns, a little bit more difficult for relative returns. You see your small cap composite on a 1 year is up 20.3%, so we'll certainly take that. Slightly trailing the Russell 2500. That's turned quite a bit year to date. You're 300 over. So stock picking is becoming more positive factor near term. International developed markets, this is Lazard and Harding Loevner, adding some nice value there. Harding Loevner's really actually done, I thought that was me, sounds just like mine, done a little bit better. Lazard had struggled. This is one we talked about a bit. Really that was the sheer relative performance, if we look in the quarterly report, looks pretty staggering. About 11% on a 1 year basis at the end of March. We roll forward a month, that 1 year performance, they cut it to 700 basis points, and on a year-to-date basis, they're just slightly behind. This was really isolated to the third quarter when financials rallied dramatically in the U.S. They also rallied in Europe. Lazard, significant underweight to financials, European financials. They didn't believe that there was quality there, and they also did not believe that they should rally in line with U.S. banks, because they're not, in their opinion, not where U.S. banks are in terms of balance sheet stability and growth potential. So that underweight hurt them pretty much, but certainly turning around quite a bit. 1 month for April, they outperformed by 100 basis points. So we're certainly sticking to their knitting. The other area to note, Wasatch had been somewhat of a struggle as smaller cap emerging markets had lagged the broader emerging markets. You're seeing that strategy year to date actually doing pretty well. And for the month, they outperformed by over 3%. So really no, while there is a little bit of manager relative performance in a couple of areas, primarily Lazard, no concerns, sticking to their knitting and their approach, and we're comfortable with what's going on there. Nothing has changed. I think what we so the last month I had mentioned that the fund that you're in, there was some redemptions going on, and there was an indication that they were going to look to create some, get an amendment to the operating agreement to allow them to what they call side pocket some investments. They were able to negotiate with the redeeming investors that only their investments would be side pocketed, so it didn't impact everyone else. That said, we do want to drill a little deeper on that fund. The performance has been good. It's doing what we would expect it to do. I think probably in the next month or next couple months we want to come back and talk about just that strategy overall and if there's other options. One of the things we've been looking at is more liquid absolute return strategies. They've become more prevalent in the market today. They're in a mutual fund format, so they're daily liquidity, lower fee than what you have in the hedge fund structure. You don't have quite the return expectation, but certainly the diversifying aspects that you get from the hedge fund absolute return strategies are there with the liquid absolute return, a little less costly and certainly more liquid and transparent. So that's something that we want to talk to you guys about.
Jason, I have a quick question. You may have already covered this and I may have missed it. On Times Square and their underperformance?
Yeah, it's similar to Lazard in that it's a quality issue. As lower quality stocks rallied and value rallied in the second half of the year, that's not really what they owned. Nothing's changed with respect to their team strategy, longer term results. We just met with them a week ago or so and comfortable with what's happening there. For the month, they're up 1.7. It's looking a little bit more in line with the market. So.
Any other questions for Jason? Yeah, looks good. Item number 12 is comments from board, staff, and citizens. Hearing none, we are adjourned at 10:30. Thank you.